Good afternoon. Thanks for tuning in. You're watching Countdown on BloombergQuint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza. Well, these are the top headlines that we're tracking at this hour. India's Monetary Policy Committee on expected lines keeps interest rates unchanged. It also maintains its accommodative stance. Indian markets cheer RBI's policy decision. Benchmark indices are up for the fourth straight day, while banking and pharma stocks are outperforming. Banks get some leeway on loans extended to commercial real estate projects, provided the delay is due to unforeseeable reasons. And Sun Pharma, Pfizer Motors and Hero Motocorp are the three Nifty companies reporting their December quarter earnings today. Good afternoon, Neeraj. Markets cheering RBI's move as well, and we're sustaining on to the gains, I believe.
Yeah, maybe off the highs of the day, but still doing okay, and banks are still holding fort in the session, which is a good thing. Remember, the bank Nifty was flat ahead of the policy. And post that, it's just inched up and inched up quite well. Look at this. This is around the policy time when the governor announced his statement and the press conference began. And post that, the bank Nifty is at a sustained move and doing rather well for itself. We should also try and show the 10-year yields, to be honest. They've just dipped ever so marginally. The point is they have not shown any kind of a spike in the session today. So the yields at 6.4650 have dipped about 4 basis points from the levels that they were at when the policy started. But equity markets, reasonably okay. Get the heat map up on the screen and you will probably see banks. NBFCs won't be a part of the index necessarily, but some of those NBFCs too would have done well. Speaking of NBFCs, by the way, Bajaj Finance is up 2.5%. But look at the gainers. IndusInd Bank 4.5%, SBI about 3%, Yes Bank 2.5%. There's gains in Axis Bank about 2.5% too, and HDFC about 1.5% in trade. Add to that mix Bharti Airtel up another 2.5% and trading at, I reckon, fresh 52-week highs it should be. So good going really for Bharti Airtel as well in the session. Reliance marginally in the green. What is not doing well? Yesterday's big gainer Tata Motors marginally off. Cipla started off well on the results, but since then has come off, so about 2% lower. ITC continues to grind lower. That's the problem with this stock now. It's not finding buyers at lower levels. And Nifty IT is a bit subdued today. Maybe there's a bit of a risk on otherwise, but Infosys, TCS, etc. have all looked slightly wobbly in trade. Not to forget, Devina, that what we spoke about when the policy statement was being made, the heaviest of the banks are actually a bit soft. HDFC Bank is in the red.
Yeah, and we have stocks like RBL Bank, Punjab National Bank, Bank of Baroda, all of these stocks probably holding up okay. But HDFC Bank and Kotak Mahindra Bank were the two ones that laid extremely lackluster from the Nifty Bank at least. But today's session has also got gains for the broader markets. The breadth is positive. You've got the Nifty mid-cap up about 0.6%, and leading it is Ajanta Pharma on the back of good numbers. The stock price is up about 8.5%, and your housing finance companies, all of them are up and a buzz. LIC Housing Finance Company, and those are all of them which have moved up post the RBI policy announcement. PNB Housing Finance, Indiabulls Housing Finance, Indiabulls Ventures, RBL Bank are all of the names that are doing well today. Amongst the losers, you've got Jubilant Foodworks, which is down about 4%, Godrej Agrovet, Crompton Greaves, Apollo Tires down 3% apiece, and Apollo Hospitals too is looking weak by about 1.5%. Coming to the broader market, small caps index, which is also active, about this is a year-to-date chart, so if you could have the daily chart of the small cap index, which is also up about 0.6%, and that should come up shortly. All right, there you have it. Before we move on, but you've got the gist of it. It's the overall broader market which is looking strong. The advanced decline is positive. In the morning, we started off with just about 833 stocks advancing versus about 350 stocks declining. This is what you've got. ITI, Karur Vysya Bank, Balrampur Chini, JM Financials, Diwan Housing Finance is up about 4% today. Losing out is Metropolis. Some correction in most of the diagnostic names, not just Metropolis. Even Dr. Lal post numbers has been looking weak. But Vakrangi, Deepak Nitrite post numbers has declined 2% under for that one. And MCX2 looking weak about by 1.7% in today's session. But also important because today is the weekly options expiry. So what's lined up in terms of the setup for the futures and options space? Navneet is joining us to tell us that. Navneet, good afternoon.
Good afternoon, Devina, and Thanks for that. Yep, this is the first weekly expiry of the month of February, and good going at least to the markets the way they have rebounded. We're up for the fourth straight session, and the Nifty futures are just about trading flat. And remember, yesterday, for a very brief period, Nifty futures moved into premium, but the closing was once again at a discount, which is telling you that there is no major unwinding of short positions which is taking place. Nifty Bank on the other side, which is outperforming, up about 1% in trade due to some measures announced in the RBI policy. You are seeing some fresh positions coming by here as the open interest is up about 21%. Remember, both for Nifty Bank intraday, we did cross the mark of 20 DMA. In terms of positioning then on the option side, today being the expiry, 12,100 call riders, they're unwinding their position. And remember, we're trading above that mark, which is telling you that we are forming a base now around the 12,100 mark. While if you look at the 12,150 call, we did touch that mark in the session. 30 lakh shares have been added there. That's also telling you, since the premium is 4 rupees, the expiry could just be around that mark of between 12,100 to 12,150 for the day. But there is aggressive riding coming in at the 12,100 put, which is added about 36 lakh shares. So looking at these three strikes, at least you're getting a picture. Today's expiry could be in that range of 12,100 to about 12,150. Talking about stock futures, it's all about financials today, and especially the housing finance companies. So Indiabulls Housing, that's your top F&O gainer. It's also crossed 50 DMA in today's session. Futures have been indicating that there are fresh long positions which are coming by, though the futures trade at a discount, but open interest build-up of nearly 28% seen, and the stock's up 12%. You also got Shriram Transport. Remember, this stock's been moving post its numbers, so it's up nearly 18% now in last three sessions. It is just 7% away from its 52-week high levels that we had seen last year in the month of March. And also, the stock on the future side indicating that the long positions continue as well. And IndusInd Bank, which is up and about today, 45% of the quantity traded has been marked for delivery. It's an underperformer for the year, down 11%, but some respite being seen as the underlying is up about 4.5%, and futures indicating signs of fresh long positions coming by.
All right, that's what you've got in terms of the F&O activity. I just want to quickly look at Europe and how the European indices are trading at this point. Give us a sense of the Dow futures as well and what's lined up for trade there. FTSE 100 is up about 0.5%, and so is the case with CAC as well as DAX, which are trading in the green. The Asian screen also shut shop in the green. Dow futures are trading up about 0.5%. So the globe and the global equities as such seem to be on a firmer footing this afternoon. And as for our markets, this is the fourth straight day post the budget announcement. Since Monday, we have been scaling higher bit by bit. 12,118 now on the Nifty 50. I just want to look at Dr. Lal Path, and since its numbers a few days ago, the stock has corrected from hitting highs of almost 1846 to 1610, now, which brings it to very close to its 50-day moving average of about 1600. So the last few minutes of trade, interesting to see how this one, because this has been a darling of the market in terms of the diagnostic space particularly. So is the case with Metropolis. I think that stock too has corrected heavily in today's session. Also interesting to see the pharma pack being so active today, and also on the back of all the, and not just diagnostic space, but the others, Cadila Healthcare, Ajanta Pharma, DV's Lab. These are the names that are extremely active. The Nifty Pharma Index is up 1%, Ajanta Pharma 8% on its results. DV's Lab also had a decent outing in the morning. It was up almost 6.5%. From there, it's come off. Now it's about 2% higher. Cadila has completely given off its early morning gains, now up with gains of just about 0.5%. But also watch out for Sun Pharma when it reports its numbers. It's going to be an interesting one from the index to report its numbers. Extremely volatile graph that you can see intraday. A lot of jagged edges out there. But let's get in a sense as to what one needs to watch out for from a market standpoint from Ajay Bagga, who's joining us right now on the show. Ajay, thanks very much for taking out the time. Since we're on the topic of the pharma space, the overall healthcare space rather, pharma, diagnostics, hospitals, what is it that you in particular like, and do you have any expectations from Sun Pharma that is going to report its numbers today?
Yeah, I particularly like MNC Pharma more because of the compliance issues that the Indian pharma has been facing. So I am more in favor of investment in MNC Pharma. Pharma, after 3 years of underperformance, expectations are high, both domestic market volumes have been growing, as well as there is a bottoming out of the US revenues. So expectations are good, but what is spoiling the valuation is the continued FDI issues that even very major players continue to keep facing. So you have to be careful on pharma. It is a buy on a 1 year, 2 year basis, but the FDI issue leads to very sharp corrections in most shares from time to time. So I would recommend MNC Pharma. Valuations are high, but you get all the benefits of the pharma play with very strong managements and very strong compliances.
Ajay, what did you make out the RBI policy announcement? Status quo, that was expected, but in particular announcements towards commercial real estate, a little bit of a leeway given out there for project commencement in the commercial space, which have been stalled for a few specific reasons, but very small segment of the real estate market. But do you feel that it would have been better if there was a larger, a broader scope of this particular announcement that would have affected housing in general?
Yeah, I just wish it had come a year before, but very welcome steps. See, overall, even if there is a pause in the rate cut, you see various actions being taken through Operation Twist, open market operations, the long-term LTRO being provided, 1 lakh crores on a 1 year, 3 year repo basis to banks. I think all those are measures which will have a very beneficial impact on the overall yield curve. The 1 and 3 year LTRO operation, in fact, will create the yield curve for those segments which are largely missing. So then the MSME being allowed to restructure up to next year March, the targeted credit to certain segments like auto, residential real estate and MSME qualifying for CRR deductions. I think those are very positive measures. RBI seems to be on the right path now, and the market was only afraid that given that the CPI is breaking the threshold of the RBI limits, will the policy stance change? And the last line in the policy was very conducive to the markets, saying that till it's required, growth will be paramount and the RBI will keep taking actions with growth in mind. So that was very positive. NBFCs got a big boost. Transmission that came out, that 190 basis point fall in the NBFC cost.
All right, I think we're just getting Ajay on a slightly patchy line. We'll try and patch that line back with him. But nonetheless, obviously, it is being viewed as incrementally positive. The steps that have been taken, the measures to make sure that there's ample liquidity in the system. The RBI has said that they're going to make sure that whatever is required of them with regards to the liquidity. They've also taken a move towards making sure that credit flow also doesn't suffer, making sure that the pipeline of credit flow keeps the momentum keeps going out there. Aside from that, all of the NBFCs are up and active, and also just want to focus on a few of these names. Piramal Enterprises, which is up, Edelweiss, which is up about 5.5%. These are all the stocks that got active post the RBI policy announcement. I think Piramal is now the highest point of the day, about 8.5% higher, 1587. Exposure to commercial real estate as well. Edelweiss is a big lap book, so you just want to look at that one. 5.5% rather was that one. Now it's up to 6.5%. So some more incremental gains coming back for an Edelweiss as well. Ajay, I'm sorry we lost your line there. Continue with what you were saying.
Yeah, so I was saying it was positive, sector banks positive, real estate, HFCs, NBFC.
We'll try and get Ajay back, but it's an extremely patchy line. But definitely it's an interesting watch. Looking at least what the bank Nifty is doing and the kind of activity that we're seeing there.
Yeah, bank Nifty is, as it is outperforming today, it's up about 1%. Remember, there was no fiscal boost which came in the budget. Now the onus lies in the hand of RBI. They've tried their best, at least in this policy. Let's see the credit offtake, which remains a key concern for our economy, whether that picks up this year or not. But as of now, we are seeing some positive moves. I also want to address Bharti Airtel, which is up and about today, and it's also crossed 3 trillion market cap, I guess, for the first time. Remember, this has been an outperformer so far now. The stock's gained about 21% and it's advanced about 95% since February 2019. So in last 1 year, the stock's almost doubled. So the gains continue. The numbers were almost in line with what the street was expecting this time around. And as a result of that, we have seen good reaction and some important commentary from the conference call also coming by, where they said some positive commentary. I will say that Vodafone Idea will survive and it will be a 3-player market going ahead. Let's see if that happens or not. But moving on, pull up the stock of Prataap Snacks as well, talking about earnings. They reported a top line growth of about 17% in the quarter ended December. However, a rise in palm oil prices impacted the company's margins. Let's discuss the quarter gone by with Mr. Amit, Kumat, the MD and CEO of the company. Hi Amit, good afternoon and thanks a lot for joining us. Hi Amit, this is Navneet, good afternoon. Take us through the highlights. We understand due to higher palm oil prices there was an impact on the margins. Is the picture still same in the current quarter as well? And if yes, what measures is the company taking to mitigate higher raw material prices?
We have done some major changes in our packaging film in our corrugated boxes, and little bit tweaking in weight of the product to manage the increased price of edible oil. But it is very difficult to completely offset the price of edible oil because the price increase was huge. Just to give you an size of this, the 63 rupees palm oil is currently trading at 85 rupees. The difference is basically phenomenal. It is very difficult to absorb everything, but we have done enough changes, and you will see the changes from the probably next quarter, not this quarter completely, but next quarter. I think in the current palm oil prices also, we should have a decent growth and decent margin.
But have you also tried to pass on that pressure in terms of increasing prices?
Yeah, we have done a little bit. We have reduced the channel margin a little bit. And we have also reduced some weight in some products.
Okay, so that's by tweaking the grammage and not exactly by tweaking the prices, right?
Right. Because we can't change the MRP. The MRP in India is fixed at 5 rupees and 10 rupees. There is not enough you can done at that level.
Okay. Amit, tell us, for the next year then, considering there has been slowdown and how we've been hearing volume growth of this sector has been impacted, how was the volume growth for a company like yours for the quarter gone by? And if you can share any guidance for the current quarter as well?
I think the volume and the value growth for us was similar at 17%. There was not much change in that. And I don't see any major difference in that. We hope that we can get good double-digit growth for the next year also.
You said volume growth and value growth was same, about 17%?
Yeah, about 17%.
Okay,
and we hope to deliver similar kind of growth or good double-digit growth in next year also.
Okay, that would be in the higher double-digit?
Definitely.
Okay. Anything else that's happening with the company? Any expansion plans, any fundraising plans?
No fundraising plan. We are sitting on cash. So no funds are required right now. But we are trying to extend our sweet snacks range. We have just recently launched the cupcake, and after that we launched the layer cake in the name of sandwich cake. We are trying to launch 1 or 2 more products in that category.
Okay,
the
Amit.
focus is on basically sweet snacks right now.
All right, we leave it on that note. Appreciate you joining us and taking us to the quarter gone by. All the best to you for FY21. That's the management of Prataap Snacks. Clearly higher raw material prices impacting the numbers, but you've also got Pfizer Motors numbers there flashing on the screen. Net profit is at 499 crore versus Bloomberg estimate of 503. It's more or less in line with what the street was expecting. The stock's up and about. We'll get you more details with regard to margins, but I believe going into numbers, Pfizer Motors had seen some bit of weakness in the last 1 or 2 weeks. Any more details you guys are getting?
Well, there's just one other income. There's a revenue figure of 2,370 crores that we've got. And that is also pretty much at par. I mean, 2,383 crores was something that the street was, that our poll was suggesting. So it's come a smidge shade below that. So that's nothing too earth-shattering. Profits are pretty much in line as well, just a 4 crore miss from estimates. We'll wait and watch as to see what happens to the EBITDA and the margins particularly. Also, there is another income component this time around. 135 odd crores is the other income component in the stock, is up about 2.5% right now. Remember, it had been facing challenges with regards to its overall domestic volumes, which were due to weaker demand, and we've been seeing that being offset by strong exports, a better mix, which offset the declines in the domestic volume. So that is something that could probably aid these numbers as well. The stock's up about 2.6%. But the fact that the counter itself has been underwritten so much in these last few days, where you've seen the stock, it's come back to 20,000 by the way, but the stock has not been a favorite, and you've seen the two-wheeler numbers coming out and how the market has reacted to those. Even Hero Motocorp, for that matter, the reaction to the numbers, the domestic sales numbers was a disappointment, and therefore probably the reflection that there was no negative in these numbers. It's at par, in line with street expectations, and that's something that the street is okay with. Stocks up about 2.8% right now. We'll try and get you some more perspective on Eicher Motors. We'll get in an analyst to talk about it, but I just want to quickly also get the ANR function of Eicher Motors to see, because this has been a favorite of sorts for a really long time. The analyst community has been positive on it, but the last few months with the monthly sales numbers looking the way they have, you have seen a few tweaks and changes in terms of the target prices. But however, the return potential not too high, not too substantial, but there is a still 6% upside on this one. But nonetheless, 32% recommending buys. It's a split in the middle in terms of its wording.
Yeah, also, I mean, the point that people will want to look forward to is, because Royal Enfield is widening the range and features, does it get a new set of buyers, a renewed set of buyers, and whether not just on the local front but the global front. So I think all of those comments would also be watch out for.
You know, and the new model which they have, in which in a certain smaller space they had started this new showroom setting, where in a smaller square footage space they were looking to sell. And that model, at least at the last conversation, suggested was picking up.
Yeah, so that is one that is happening too. I mean, there is enough and more that has been said about the BS6 cost increase, but as the study from Goldman Sachs seemed to suggest, it was not really a big factor for them. So we have some other details as well. Revenues have stayed largely flat. So nothing dramatic out there too, but I think Ankit Marchant is with us. He's from SMC Institutional Equities with his thoughts on these numbers. Ankit, what have you made of the top line and the bottom line numbers that we have thus far?
So, on the top line front, I think it is pretty much in line at what we were expecting. In fact, on the EBITDA margin front, the EBITDA margins have come slightly ahead of what I was expecting. I was expecting in the range of some 24%, and it has come in at some 25.3%. So I think it's an okay number looking at the set of volume growth which the company was doing, or the volume degrowth which company was facing. These numbers looks quite okay to me.
I'm sure we'll get into the details, but the basic analysis of the EBITDA expansion, Ankit, what do you think has led to this? And the question, of course, that every company which has shown an expansion of margins is whether this is sustainable or not. So, because the stock is reacting, I believe, in part due to that EBITDA expansion.
So, I think it is more because of the price increase which they have taken over the last quarter. We have seen the price increase in the range of 3 to 4%. So I just need to check on the number front, because I've just seen the results. But on the, if I have to talk on the margin fronts, yes, one was, as I told you, some price increase which we have taken. Second, I need to understand on the SGA cost. Has there any SGA cost lower? Has they spent lower on the SGA cost or something like that, to understand more?
All right. What happens to the stock now, Ankit? I mean, obviously, while your estimate suggested EBITDA margins of sub 25, the Bloomberg estimate was absolutely bang on. I think we had a number of about 25.4 in terms of their EBITDA margins. They clocked in about 25.3. So almost on every other leg, it's in line with expectations. But what is the call on the stock now?
As far as the numbers, the monthly numbers which I have been observing, there have been no signs of monthly numbers improving, both on the Royal Enfield side as well as on the Volvo Eicher side. It used to do only in January. I've seen that there has been some spurt in buying in January. They had a domestic sales of 71,300, which was some 25% up quarter-over-quarter. So those So 25, 26% it was up. It was a 62,000. So numbers as such, one will be looking at how are they ready for the BS6. Currently, a lot of talks have been going on that they're going to introduce lower price models for BS6. So unless that doesn't get launched, I don't think so anyone would like to take a view right now on Eicher Motors. I believe, and also the CV cycle is also going through very tough time. And if there is a pre-buying which happens, so then it should lead to some volume growth in the next quarter or in the quarter 4. But since quarter 1 will be again muted, everyone would be looking at that from that particular angle.
Ankit, any thoughts on realizations? What was the expectation? Because I think majority of the analysts were expecting realizations at least to be higher, which would have aided the top line growth.
Yeah, I'm just yet to evaluate it on that front.
Okay, and what's the stock called? What's the rating? Would you revisit your rating and the target price that you currently have?
So the stock is currently under soft coverage, so I don't have a rating on the stock right now.
Okay, Ankit, we'll leave it on that note. I appreciate you joining us and taking us through your initial thoughts on the numbers of Eicher. The stocks reacted positively, at least. It's trading above the mark of 20,000. It's up 3%. The numbers are looking in line with what the street was expecting, though on year-on-year basis, there has been contraction with regard to margins, and that's also owing to the decline in volume growth that the entire industry has been exhibiting so far. So that's Eicher Motors. I also feel this particular stock was underperforming the pack in the last 1 month or 2 months.
Like a very under-owned stock.
Yeah, so maybe on after the numbers have come in, it could be fresh buying, or let's see whether this rally continues or not. But as of now, it went into the numbers pretty much weak, or it could, if there were any short positions, looks highly unlikely considering it's not a very, very active stock on the futures and options side. But since we're on the topic of earnings, it was a steady quarter from Berger Paints. Operational performance was steady along with the growth in its top line and bottom line. Yash Upadhyay spoke to Abhijit Roy, who's the MD and CEO of the company, and began by asking him about the volume growth prospects going ahead. Listen in.
Do you have the
Decorative volume growth has been good, around 10%. So that has been relatively more steady given the current situation and a tough quarter, because of the preponement of Diwali and also excessive monsoon. We still managed to grow at that near double-digit figure.
All right. Abhijit, by any chance, does this 10% volume growth number appear slightly lower? Because we have been doing higher than that for the last several quarters, and slowly that volume growth number has been coming off, and it's only just managed to, hit the double-digit mark this time around. Are there any cautious signs as far as the demand is concerned, or do you believe that going forward things will pick up? At least that is what is anticipated, and the volume growth story would continue to improve going forward?
So as I said, the demand got affected in the quarter on account of 2 factors. One was the prolonged monsoon, which continued right up to end of October. And the other thing which happened was the preponement of the Diwali season. So obviously, last year, Diwali being slightly late, we got advantage of that, whereas in this quarter, we got impacted adversely. So the combination of these two resulted in a bit of a lesser volume growth than anticipated possibly, but well explained by these 2 reasons. Whether it will improve or whether it will remain like this is difficult to say. Depends on the economy at large, because decorative business at the end of it largely depends on how the economy performs.
Right. And as far as the operational performance is concerned, Abhijit, we've seen obviously that crude oil prices have cooled off substantially, and even after speaking with some of your peers, we understand that has been the core reason for the improvement on the operational front. But could you also shed some light as far as the product mix is concerned? Has this volume growth been largely achieved because of the sale of the distempers and putty, as well as the focus on the lower end of the pyramid, or overall are you seeing an improvement in your product mix?
So in our case, the distemper sales actually went down. It became negative. Putty had a decent growth, but distemper had a negative growth. And we had actually a much higher sales growth in the case of premium products, and which is why the operating profits also shown a higher percentage increase than one would have expected.
So then, sir, safe to say that with the crude oil prices cooling off, there wouldn't be much tinkering with prices, and you would prefer to keep the prices at where they are and focus more on the distribution and ad spends?
That's right. You are absolutely right. We will prefer to continue with this current pricing levels. And whatever savings that we might generate because of the cooling off, it doesn't happen immediately because it comes with a lag.
Right.
So the profit, margin doesn't shoot up or down along with the oil prices, as is normally expected to happen, as if the oil prices goes down today and tomorrow, because we have a lot of stock of raw material, of finished goods. So it doesn't happen in that manner. But if there is savings, that will be used for, primarily for advertisement and driving up volume.
All right. And sir, at least as far as the fourth quarter is concerned, typically the fourth quarter, or at least overall the second half, is generally viewed as positive for the paint industry, be it in terms of the repainting cycle as well, seeing a pickup. Any signs that you've seen which indicate that the fourth quarter has started off on a positive note, at least from whatever that we have seen so far?
So no great, significant departure from what has been happening in the third quarter. So it remains more or less at similar levels as of now.
Okay. And so lastly, given the fact that these are very challenging times, at least as far as the demand side is concerned because of the overall slowdown, but some green shoots, at least as far as the economy is concerned, we saw the extended monsoons aiding the Rabi crop, and that is seen as a positive, at least for the rural space. Do you expect to grow at a much faster pace than what we have been seeing despite these challenging times?
So, that's the expectation, that if the economy improves, obviously we expect that also we will participate in that growth. But it has to turn around, and the Rabi crop has been, is anticipated to be good. Once it comes out, probably from April onwards, when the money flows into the market, we might see, better results at that point of time.
And lastly, sir, could you leave us with a word on any of your expansion plans that you have, or your capex target for FY21?
Usually near Pune, that is on stream, and will go fully operational from 1st of May. The other one which is coming up is an integrated plant of decorative and industrial. That's coming up near Lucknow. There the construction is about to start. So this is as far as expansions are concerned.
Okay, that was the management of Berger Paints talking about their earnings. The stock, however, has been weak. Volume growth was about 10%, and they've stated that long monsoon impacted the numbers. 573 is where Berger Paint is trading. Remember, it's been an outperformer, not a cheap stock at all. It's expensive than Asian Paints as well.
I think 80 times or something it's trading.
That'll be FY20. Yeah. I think 1 year forward is about 65 or 67 times. All right, let's shift focus back to markets then. And Amar Singh of Angel Broking, who's joining us on the show. We'll get you some technical thoughts from him. Hi, Amar. Good afternoon. I think we've crossed 2050 DMA on Nifty. Would you take a bet at current levels?
No, not at the current levels, but yes, I would say Nifty sustaining above 12,050, 12,100 zone would definitely be a welcome move forward, because if we go back slightly on the 29th of June, it had made a high of 12,182. So roughly around 12,180, 12,200 is to act as an immediate level of resistance. But yes, one needs to be at the same time slightly cautious, because on the downside 12,050. So it's a range of 12,050, 12,150, 200 zone, wherein Nifty is likely to meet with resistance on the upside. So I wouldn't recommend any fresh trade at these levels.
Okay, what about the Nifty Bank? Anything that's open out there, Amar?
Yeah, if you look at Nifty and Bank Nifty, if you compare the charts, I would say Bank Nifty is looking stronger as compared to Nifty. So clearly that shows that if a buy is to be taken, Bank Nifty is a better option. And I would say sustaining above, because it did manage to, the Bank Nifty Feb futures did manage to breach the 31,500 mark for a brief moment and then corrected from those levels. So sustaining above that level, then it has a potential to rally towards 31,800, 32,000 levels. Whereas now on the downside, 30,700, 30,900, that should act as a crucial zone of support for Bank Nifty.
Okay. Brijesh Singh of StockAxis is also joining us on the show. Brijesh, good afternoon to you. Let's get in your index calls. We've got the Nifty above 12,100. We've got the Nifty Bank 300 points gain today. What's the trade looking like?
Good afternoon, Devina. No doubt there had been a wild swing in Nifty as well as Bank Nifty, and from roughly around 12,200, Nifty got corrected and made a low of 11,615, and after that again a big swing on upside. At this juncture of time, 12,170 around zone, I feel that Nifty would be finding a minor, or I would be saying it would be finding a resistance zone. I think that looking the hourly chart, the price look little bit tired, whereas the oscillators are started making a lower highs formation, which indicates a little bit of profit booking. So I would be going on a sell side of Nifty spot, taking a value 12,130 and above. One can go on a sell side with the stop loss of 12,180 and play for the target of 12,070. Anything closing below 12,050 would be giving an invitation again for a 100-point downside. Regarding with the Bank Nifty has been concerned, the 31,400 to 31,500 has been acting as a resistance. So here also it look Bank Nifty look little bit tiredness, so a profit booking can be there. So if it trades above 31,300 and above, one can go on a sell side with a strict stop loss of 31,500 and play for the target of 30,900.
Okay, a quick call on individual stocks then. Brijesh, first off to you.
I have two calls, both on the buy side. Now, my first buy call is Hindustan Petroleum. The stock had moved from a level of 223 with increase in volume. So presently it has been quoting at somewhere around 223 zone or 239 zone. One can take up long side in it with the stop loss of 230. Play for the target of 260. Time frame to hold the counter would be a week time frame. Another buy call. What we have been witnessing from the NBFC point of view, that PFC, REC, L&D Finance has started moving up. So in that, REC charts looks good to me, and it's given the higher lows formation, and chances are that it might shoot up in a couple of days. So 152 around, the stock has been quoting. Present value can be used to go long with the stop loss of 145. Play for the target of 163 and 164.
Amar Singh, what about you?
Say that I have two stocks on the buy side. The first one is ICICI Bank. What we are seeing in ICICI Bank is that the stock did correct towards 500 odd levels, and from there it has witnessed roughly around 8 to 10% up move. And technically, if you look on the long-term charts as well as the intermediate-term trend as well as the short-term trend, ICICI Bank continues to remain strong and positive on the charts. So this is one stock one can definitely look at. So buying around 535, 540 zone. With a stop loss of 524.5 and a target of 568 on the upside. And the second stock to look at is IGL. Again, this is one stock, if you look at it from a long-term perspective and the intermediate-term perspective as well as the short-term perspective, this continues to remain strong and positive, and the uptrend remains intact. And the best part is that in spite of all the sharp volatility that we witness in the index and major stocks, this continued to hold fort. And the stock continues to be positive on the chart. So IGL is a buy in the range of 517, 519 levels. So roughly around the current levels with a stop loss of 504 and a target of 544 on the upside.
Okay, just pull up a UCO Bank. I think those numbers are also flashing down below on your screens. We've got the asset quality improving, probably the reason why you've got some excitement around the stock. There is another income component, but however, gross NPA is at 19.5% versus 21.9% quarter on quarter. But they have a Q3 loss, 960 odd crores is the loss that they've clocked in. The net interest income is at about 3,770 crores. Stocks up about 6.5%. Smaller name, but nonetheless active. Anand Tandon, market expert, is joining us right now on the show. Anand, a quick take on the market mood right now. It seems like everyone's digested the budget pretty well. The RBI policy also was, taken in gracefully. Do you feel that we could once again start aiming at surmounting the previous record high?
I don't see a trigger that can take you past the previous high. Whether you can reach that, possibly yes. The momentum is fairly strong. There has been probably a lot of short covering plus, a renewed interest in terms of where the market was prior to the budget. I think it had given up quite a lot, and consequently, we are probably seeing a return to normal. However, I don't see anything in the budget that can cause a new spurt per se. If it were to continue to move up, it will be more on the back of international flows and continued strength in international markets.
Okay, 12,131 for Nifty. Anand, what about the earnings then? What have you made up of the Q3 numbers, which so far have come? Largely, I believe they've been in line, especially in an environment where we were talking about growth slowing to 5-year low. Are you satisfied? What's your assessment of December quarter numbers, and anything specific which has stood out according to you?
I think when you say that the numbers have been in line, they are largely the frontline companies. The early numbers always tend to be better than the later numbers. So we need to see whether or not the second half numbers become any worse. Assuming that they are not disappointing, all it means is that analysts have finally caught up with reality. It doesn't necessarily mean that things have turned around. I think we still have some more way to go before the economy actually begins to show signs of strength. There will be a near-term uptick in terms of earnings if the if the inflation continues to sustain, largely because the earnings numbers will begin to look higher on account of inflation, till the cost pressures catch up. So if the inflation continues, then for some time at least there will be some kind of nominal top-line growth in terms of company performance, and that may translate into the bottom line at least for the early part of the inflation upcycle. Given that we don't really expect inflation to sustain, even that is not likely to last for too long, though it may affect the current quarter, and therefore you may get a decent quarter. Net expectations are low, valuations still remain expensive. None of the new sectors, there are no new additional sectors that are likely to start dominating. So it seems to be business as usual.
Okay, and talking about earnings, just want to pull up iShares, which is now sitting at days high with gains about nearly 5%. It's also your top gainer among the Nifty constituents, up exactly about 5 to 5.5%. Realizations, they've come in at 1.2 lakh per unit versus 1.1, which was seen a year ago. So definitely there has been an increase in realization, which has aided the top line growth this time around. Not that it's not a cheap stock in the auto space, Anand, but what are your thoughts on iShares Motors and the auto pack in its entirety?
Well, the auto sector has actually had a fairly decent run in terms of stock prices, but if you see the numbers that are coming through, it is not particularly exciting in terms of the growth. I think the growth will continue to remain somewhat muted, and given that we are doing a shift in terms of the fuel, etc., I don't see that recovering very quickly. Maybe the second half of the calendar year may provide better, more stable figures once we are over the hump as far as the shift in the fuel is concerned. Broadly, if you were to look at where you should be placing money, I would still argue that it is the rural sector. The crop is expected to be good. Consequently, demand from the rural sector may actually revive. And anything that you sell in rural markets, therefore, may do better, especially given that the government also wants it to do better. So, slightly higher crop prices as well as a better monsoon may actually combine to give you a slight increase. Also, that's been a depressed sector for so long. So, therefore, consequently, from there, you would derive that, tractors would be probably first of the block, along with perhaps two-wheelers, especially the motorcycles. iShares per se is an iconic premium bike, which has begun to show signs of fatigue in terms of the domestic market. The pipeline for orders has kind of shrunk. Most of the markets that they were selling at, especially Kerala and so on, have kind of got saturated. The market in UP, etc., is large, but not yet, which is not saturated, doesn't have that kind of purchasing power. So I would think that their next level of upside, at least on the motorcycle business, has to come from whatever they do in the global markets. Given that it's not really a millennial bike, not in terms of technology or whatever, you need to have you need to have people who have a bit of nostalgia about it. So if they are able to tap into that, certainly it can do well, but otherwise I think it will find it difficult to reach its previous peaks.
Okay. Pfizer Motors at the highest point of the day now at 20,583. Anand, is there anything that you have probably shortlisted at the start of the year as stocks that you need to at least have on your watch list and probably get into them at attractive valuations on price points?
Well, rather than waiting, if you really look at the strategy one was following, it was really that you were expecting to see an attempt at broad basing the market rally, and I think mid cap and small caps did perform for about 3 or 4 months, basis the expectation that, given where we are on the economic cycle, the government will attempt to push up the cycle and therefore, have a more broad based rally. Unfortunately, that belief has been kind of has proved to be disappointing. And we don't see anything in the budget which is going to change anything. Therefore, to some extent, you are looking back at the front line. Now, in the front line, if you look at valuations, the one place that you can get, there are sectors where you can get perhaps some, cheap stocks, especially, for example, if the government were to do something in terms of the power distribution, which they've been talking about, then clearly power generation and perhaps distribution, but more generation, I think, which is a really, really depressed sector, is something that one could look at. So, everything from NTPC downwards begins to look a little more attractive. The other sectors like telecom have already done quite well, but we expect to see prices continue to move up, largely on the back of increased consumer prices as well. So we do have sectors that one can transit into. And overall, I think, the public sector banks, I think, will continue to show fairly strong profit growth over the next 12 to 24 months. So those sectors will remain. But the areas that will show you near-term performance in terms of the earnings will continue to be the consumer sector and so on, which are grossly overpriced, but you have to be in it for lack of anything better because of the momentum that's driving it.
Right. I will keep that in mind, Anand. But, talking about earnings, then competitive pressures in the U.S. portfolio is likely to impact Sun Pharma's earnings this time around. The drug maker's margins may also be impacted owing to higher R&D spends. Darshan Mehta is here to take us through what the street is pricing in from Sun Pharma. Darshan.
Yeah, so 10% top line growth, but a degrowth both on the profit front as well as the EBITDA front. One of the key reasons that probably it will happen is the fact that, that Taro has already come out with numbers. So if you're looking at the numbers that has come out, if you're looking at the numbers, obviously on an operational front, Taro was a weak set of numbers. Now the domestic formulation is something that will grow 11%, profit will grow, and the rest of the world market is expected to grow by close to 40%. The other factor is the US market. That's expected to be slightly weak. The US sales are expected to be anywhere between $220 to $230 million ex Taro. There is a lot of competitive products that have come in, so that is something that could probably even dent the margins. Now basically they have significant amount of specialty portfolio for which investments will go in, and that is also something that probably will affect the margins. On the rest of the world, they have acquired Polar Pharma, and that will be integrated. But more importantly will be the commentary that we need to watch out for in Sun Pharma and what they expect to do with the specialty portfolio.
All right, Darshan, thanks very much for that. Hero Motocorp is expected to report a sharp fall in profits as sales volumes decline. Forum Bhatt, she's here with us to give us what is expected, tell us what is expected out of the earnings of Hero Motocorp. Forum, what's the market pricing in?
Yeah, so weak set of numbers are expected from Hero Motocorp this time around. Revenue is expected to decline by 15% at about 6,693 crore. Net profit is seen down 39%, EBITDA is seen down 14%, and margins are expected to remain flat at about 14% this time around. Now remember, in the quarter gone by, a company reported a 14% decline in sales volume, which is going to have a negative impact on the revenue. Realizations, however, on the other hand, are expected to increase this time. Margins are expected to remain, constant or flattish this time around. That is basically on account of negative operating leverage and higher discounts offered by the company. Now, management commentary on post-festive inquiries and retail demand is something which is to be watched out for.
All right, Forum. Thanks a lot for bringing that check for us on Hero Motocorp. We will be tracking those numbers pretty closely. Remember, yesterday the stock was down about 3.5%, but there is some recovery which has come by at least today. The stock's at it's up 1.5%. Remember, but it's come off from those levels of 2,500 that we had seen last week. So it's going into the numbers at a weaker side. Brijesh, coming on the charts for Hero Motocorp, it's currently at 2,400. Would you take any bet here?
Navneet has been trading in the range 2,300 on a downside followed by 2,500 on the higher sides, and at the present value looking out is on a daily chart it had made the inside bar candlesticks. It doesn't make promising to me till the stock doesn't trades about 2,450 on a closing basis, whereas even the oscillators on a daily charts are indicating with the lower highs formation. So present value can be used to go on a sell side, or any rise till 2420 can be used to go on a sell side with a strict stop loss of 2450 and play for the target of 2300.
Okay, that's Hero Motocorp for you. Pull up Indiabulls Housing, that's up 17% now, and we were mentioning how the NBFCs are moving higher, especially the housing finance companies, and the ones which are moving up, remember, are your beaten down stocks. Even L&T Housing Finance has seen gains about 7.5%, while some of the other companies within the same space, Piramal is up 7.5%, Shriram Transport also seeing gains of nearly 6 to 6.5%. In fact, Shriram has done pretty well in last 3 sessions at least. It's gained about 18 to 20%. Anand, would you venture into the housing finance space, or would you stay away?
Absolutely. I think there is nothing wrong at all with the housing finance space. In fact, while there were expectations that there will be margin pressure and so on, the reality is that that's the space where, the NBFCs are not really competing. Many of the banks still haven't started pushing very aggressively in that area. And most of what the government is doing, which is, pushing long-term interest rates down, is not going to impact margins negatively for them in any major way. So overall, I think that's one sector also where the demand, at least on the lower end, will continue to grow fairly robustly. And hopefully with the affordability becoming more reasonable, there is the growth is almost assured. So all in all, weakness in that sector, something to be bought in.
Let's quickly get a technical check also then, since these stocks are buzzing. Amar Singh, on the charts, Indiabulls Housing, or for that matter, L&T, which one would you pick?
Yeah, I would say that Indiabulls Housing has displayed some sort of up move in the last couple of sessions. But again, on the upside, what we are seeing is towards 335, 340 levels. That's a zone of resistance for Indiabulls Housing. So one needs to be slightly cautious on that. With that regard, I would say L&T Finance is a better option, because technically, if you look at it, it's very strong on the charts. Yes, there is one crucial zone of resistance around 127, 128. If that is taken out, then the stock has the potential to rally towards 140 levels.
Okay. Let's talk also about the stock that had been moving up all these days, and that's IRCTC. Today's taken a breather of sorts. The stock's down marginally, though not a whole lot much, but it's down about 1%. 1494 from highs of, I think, about 1563 that it hit in today's session itself. Anand, do you have a call on IRCTC?
Well, it's obviously done exceedingly well. It has beaten expectations even after the IPO, and it is not cheap by any standard. However, I think the market tends to look at it more in terms of number of users, etc. If it was a private company, one could justify the kind of valuation we are looking at. I still have serious reservations of the government's ability to monetize much of what they're doing. It's not a new business. It's not as if they will do something dramatically different. Most of what they've been doing for a long while. Of course, this year there will be a reasonable uptick in terms of the operating profit, largely because they are now able to charge for tickets all over again, which for some time they were not able to. But beyond that, I would like to see the results coming through before one can take further call, especially at the price we are already sitting at.
All right, and that happens on the 12th of February. So let's see what IRCTC can do on the 12th in terms of its reportage. Stocks, however, at 1495. Anything within the real estate basket, Brijesh, that you would trade on? DLF, Godrej Properties, Sobha, Oberoi Realty. Brijesh?
See, Devina, if I look out the realty sector as such, Shobha looks little bit better as compared to other right now. After making a high of 450, it got corrected and now it's near the support zone of 412 around the stock has been quoting. Present rate or any dip till 405 can be used to go long in it with the stop loss of 390. And again, chances of shooting up back to the level of 440 to 450. So Shobha looks good on the chart as compared to the others players are there in the realty sector.
I just want to also look at Prestige because this one seems to be out of flavor suddenly. At the start of the month, you had this stock almost on a daily basis moving up significantly, about 3, 4, 5% a piece through the day. Post results, the stock's not done a whole lot much, about 374 is where we are at right now. Brijesh, this one included, I know you've already spoken about Sobha, but just adding Prestige to that list.
See, if I look out the chart of the Prestige on the daily basis, higher tops and higher bottom formation has been there, and 425 onward the stock got corrected and made a low somewhere around of 330, and again it has moved up. Now 374 aggressive buying I would be avoiding. But if it comes somewhere around hardly say 4-5 rupees of correction can be seen, then it would be good for the risk reward ratio has been concerned. So 370 and below can be used to go long in it, keeping a stop loss of 355 and again looking for the target of 395 to 400 in a short term time frame.
Okay, that's Prestige Estates for you, just about trading flat. Dalmia Bharat is doing quite well. I think that stock's gained about 12%. And a couple of other result reaction from the smaller space. VMart has done quite well in today's trade. It's up about 13 to 14%. Remember, for VMart, the bottom line was up about, that's Dalmia Bharat. Pull up Dalmia Bharat Sugar. I think that stock is up. That's Dalmia Sugar, which is up about 12 to 13%. And VMart bottom line was up about 40%. And the street seems to have given it a thumbs up. That's up 12 to 13. That's Dalmia Bharat Sugar, which is up about 12 to 13%. Anand, before we let you go, all the big events are done. As so to say, budget is done. RBI too has more or less laid a roadmap going into 2020 now. Markets have recovered from the lows of budget. It definitely gave you an opportunity to enter at lower levels. If somebody wants to build a portfolio now, what would your advice be? Is it the right time? If yes, what would you venture into? Will it be like last year, buy expensive quality stocks, or you would advise taking some bit of risk and nibble into the broader market space?
Well, if you're taking a 2-3 year view, then all times are good times. If you take a slightly shorter term view, obviously we have had a good run up. You may get a couple of 100 points, but beyond that, it'll become a question of the direction of the market. There are enough and more reasons to be scared of the market. But if you are, as I said, looking at a 3 to 5 year view, then any time is good. Now, within the market, on a 3 year view, what should you be buying? Since I'm more of a value investor than a momentum investor, I would look at those where there is a likelihood of change on the positive side rather than those which are already doing very well and are priced accordingly. As I mentioned, some of the sectors that I think are worthwhile are things like power generation and telecom and so on, which have not done so well. That said, the logic for a more broad-based rally seems to my mind have kind of withered away a little bit. So you are still better off looking at the larger cap and having a reasonable allocation within that. And you have to play for the mid cap and small cap to give you the alpha that you may get on your portfolio. So a judicious mix of large cap and then the rest is what I would recommend. And in the large cap, obviously, you are trying to go along with the rest of the market. So the ones that are doing well will also help to diversify the portfolio. So, the usual consumer and the private banks and so on, are, as well as perhaps IT and to some extent some pharma companies are necessarily part of the portfolio.
Okay, so have a proper mix of large cap and small cap. Thanks a lot, Anand. Thanks for joining us and taking us through your thoughts on markets. And while we are on this topic, India's macro concerns are going to continue to weigh on equities, says Shankar Sharma, the Vice Chairman and Joint MD of First Global, says the government's hidden message in the budget was to get used to the slower pace of growth for at least the next year. Listen in.
India has been a laggard in the last several months. If you look at the relative chart of India versus emerging or India versus the globe, I don't see that trend changing. I think it will still be India will at best market perform with global equities. At worst, it will lag global equities because the macro picture in India is a tad more worrisome than it is in other parts of the world because the trend has been down. We are all hoping that the 4.5% GDP print that we saw is the bottom. But the other message that the budget gave out, and which we must not ignore, is that the general consensus was that there would be a breaching of the sort of whatever 3.8% fiscal deficit number, and government would basically say that, look, we are going to go to 4.5%, and the extra percent, which is around 2 lakh crores, would be used to pump prime the economy. That did not happen. So dwell a bit deeper on why that did not happen. I think the government, again, in one sense is right, said that if we do that, then we are risking a ratings downgrade, which can then further have sort of downstream effects. So the message is get used to a slowish growth forecast for India, because unless you put in large amounts of capital to work, you are not going to move this needle from 4.5 or 4%. And in reality, it's a lot lower than that because this is, remember, the new series and adjusted for the old series, etc. It's probably 1% or 2 lower, and plus high frequency data is also pointing to a lower number than the GDP print. But be that as it may, you should get used to a slowish GDP profile, growth profile coming from India. That's the message that the budget has given out, and you have to take it. I mean, you can't fight it. I think the government has said that, look, we cannot put in the amount of capital needed to take it to 7 or 8%. I mean, implicitly, that is what this budget has conveyed. And if you take that, then India's earnings growth will be not more than 4-5%, because earnings would typically tag nominal GDP growth, which has been 7 to 9%. It's actually, it lags a bit. 4-5% earnings growth tops, that's the highest. You don't expect the market to give you 20% returns. I mean, that's simply not going to happen. Select stocks will, but on aggregate basis, markets will not. Which is why if you see, then the last 4-5 year returns from India have been around 6 or 7% compounded in rupee terms. Remember, in dollar terms, it's a lot lower than that. In rupee terms, you're talking 6-7% CAGR, which is about the same return as what a government bond will give you. So equities in India generally have been disappointing over the last several years, in the last, I think, 5 or 6 years. I don't see that changing dramatically in the future, especially in light of absence of any major fiscal stimulus coming from the budget. So in that situation, India will at best market perform, probably lag the global markets.
The one small optimist view out here, Shankar, and I don't know if you agree, but the belief also is that with the corporate tax cut done in September and DDT, there is some money in the hands of corporate India should it find favor to invest and revive the capex cycle. You agree, or is it difficult to even agree, or time, or both?
Well, I think whoever is thinking that is completely off his rocker. Capacity in India is not the problem. Supply is not the problem. Demand is the problem. How is putting more money in the hands of a few select corporates, which I think number about 30 or 25, going to revive the capex cycle? They already, and most of it, by the way, are capex light companies. So you have the tech company or the services companies or the banks and the FMCG companies who are anyway either zero capex or minimal capex, because that's not their business model. So the guys who require capex are the guys who are not going to get any benefit from this tax cut. So I don't know how people come up with these kind of ludicrous sort of leaps of faith. These companies are already cash rich. They already have enough capacity. There is enough slack in the economy in terms of capacities. Why on earth will you take that money which the government has helpfully given you and put up capacity? You will distribute it as dividends, or you will, basically, and that too is a problem now, as we now know. So that's in light of the budget. That itself is now another question. But you will either sit on the cash or dividend it out or do a buyback instead of putting it to a really capex intensive use.
All right.
Okay. Okay. Okay, all right. You can read and you can hear the entire interview if you want to on our website, www.bloombergquint.com. That was Shankar Sharma of First Global. Yes, Neeraj.
No, I was about to say the same thing. And that interview is there on our website. Pretty interesting. And the one thing that stood out really, and I think Lupin numbers are out, so we'll get to that. But he said almost everything in India is upside down, valuations even more so. You lose money when you buy the cheap ones and you make money when you buy the expensive names. So that's the interesting bit.
And a loss of 835 crores for Lupin. Waiting for some of the other details to come out as of now. That's what we've got. The stock right now, not doing a whole lot much.
3,700 crores is the net income for Lupin as well. So that's the other bit. We'll try and get those details. But
yeah, 3,770 odd crores is what we've got for Lupin. Tax expense has gone up in Q3, about 767 crores worth of tax expense versus 245 crores last time. So I think that's got a major bearing on this loss figure of 835 crores. We'll come back to these numbers, but I believe Sun Pharma has also reported its numbers. 914 crores for Sun Pharma in terms of its net profit, which is lower than the expectation of 1,054 crores. Revenues have come in at 8,150, which is also a shortfall from the estimate. It was expected at 8,228 crores. So both on the profit as well as on the revenue front, it has come in below street expectations. EBITDA was any which way seen below. Let's see if it's worse off than what we were expecting. Taro, remember, had already reported a weak quarter, so you somehow factored that in. But ex-Taro, the US sales was expected somewhere around $220 to $230 million. Those numbers are also important to keep a track of. I think that's what we've got for now, 914. And just see the stock price of Sun Pharma too, to see if there's any major reaction to the stock price. No, not much. Just about flat, 426.
It does seem like both of the pharma names have come in just tad below what the estimates were, Devina. On Sun Pharma definitely on the bottom line front, but on the Lupin stock as well, on the top line front, just marginally, a shade below what the larger estimates were, and which is why that stock is taking a bit of a knock. But Sun is the bigger draw, and those numbers are there on your screen. I think Mayuresh Joshi is with us. Maybe an initial thought from him, and then we'll analyze the numbers in detail as well. But Mayuresh, two pharma numbers have come out. You've just heard us speak about them. Any thoughts on these initial numbers?
So, afternoon, Neeraj. I think the prima facie look a little bit softer than expected, because I think there was large expectations that EBITDA margins, at least for Sun, should be in that range of 19 to 20 odd %. And the fall basically is because of the incremental cost of the specialty product pipeline that they have launched. So I think Illumia, Sequa ramp up maybe was expected to be a little bit on the softer side. So I think let's see how it happens, because I don't have the granular details with me. But prima facie, I think the numbers do appear a little bit softer than expected.
Impairment cost of a certain IP for Lupin as well. I think that's amounting to 289 crores, but obviously the margin numbers are weaker, 11.4% versus 17.2%. Estimate was 16.5%, so this is really worse off. Estimate of 706 on the EBITDA, they've clocked in 429 crores, so that too is a big miss, which is down about 37%. But again, there is that additional tax implication that they've seen. The stock's down about 1%. No rude shock. I mean, from where it was, it has come down, but it's down about 1.5%. I think now it's reacting more significantly. 710 now for Lupin. Just a quick take, Mayuresh. While we've been talking about earnings, Pfizer Motors reported its numbers just a while back, in line with street expectations on all fronts, and I think the stock has been given a thumbs up on just the back of the fact that it was an ignored stock up until now, under-owned for a while. Do you feel that now this probably meeting street expectations was the kicker needed? If probably the street would have expected a slightly softer quarter, but this was also fine.
Yeah, I think the street will live with that, Devina. And again, largely, I think the commentary is something that the street will probably look up to. So what probably comes out in terms of the entire transition from BS4 to BS6 is going to be extremely critical, the kind of inventory days that they are probably holding on to at this point of time is also going to be critical. I think the exports have probably been holding up for them, though very, very small component in terms of contribution to the overall EBIT and EBITDA levels. But largely, I think, yes, the expectations were very, very soft, at least for the past few quarters. They seem to have been plateauing at this point of time. But what the commentary will probably indicate is going to be a key driver for the stock going ahead. So I think I'll wait out for the management commentary, and then we probably take a call on this.
Sun Pharma, while lower than what they did in the last time, but are better than estimates. The estimates were 21.2 and they've come in at 22.6%. So that is part one. And while the net profit is lower, I think the street will take heart from the fact that the revenue numbers are not are 8155 are not substantially off from what the estimates were. So on the top line they've been okay, and while EBITDA is down about 14% and much lower than the estimated, the margin number looks pretty okay, and that is actually a good sign. So
you've got a dividend per share of 3 rupees also, which has been declared by the management. So
yeah, so that's about a percent dividend yield too. But yeah, the 1.5% number uptick, I think, guys, I think this has been a standard feature this earnings season, isn't it? Almost any company that has reported an EBITDA margin beat, the market has kind of given it a bit of a thumbs up. I don't know if this will last for Sun Pharma. I'm not suggesting that at all, because there is a miss in that sense on the net profit front or otherwise. But the margin number is happening.
It's coming off the prices.
Yeah, so Sun Pharma is coming off as well from the levels. But the margin number is pretty interesting, and that should actually aid. What did you, the other one is, we've got now 6 pharma names that have come out with numbers in the last 24 post-market hours yesterday. So we had Ajanta Pharma, which came out with a very good set of numbers. Kadila and brokerages were pretty upbeat about those numbers too. Divi's is a bit of an issue maybe. So that was the other one. And now these two. Shrikant Akolkar of Ashika Stock Broking joins us right now with his thoughts on the Sun Pharma and the Lupin number. Shrikant, thanks for taking the time out. First, on Sun Pharma, what do you make of the numbers? There's a small miss on the revenue front, but the margins seem okay.
Yeah. So I think the numbers have been along my expectations. EBITDA margin, we were expecting about 21%. So now this is 23%, which is better than what we expected. That is also along our expectation. We were expecting about 1,020 crore profit. So this is also as expected during this quarter.
It's a 914 if I'm not wrong. So what's the hit and what's the miss with regards to Sun Pharma, Shrikant? And then therefore, what's the call on the stock based on these numbers? I'm sure you wait for the con call and the other details to come in.
Yeah, so we have been neutral on the stock because we think the US is yet to fire profitability, and they are putting a lot of efforts in building the US specialty business. So we are still cautious on the stock. We will basically review our rating post the conference call.
Shrikant, do you also track Lupin? The numbers just came out and they look way below than what the street was expecting. Top line's down about 5%. I think the street was expecting EBITDA margins to be at 16.5%, while they've posted about 11.4%. And due to some impairment cost, they posted a loss of about 835 crore.
Okay. So I have not seen the numbers, but we are also cautious on Lupin because they're also the story of Sun Pharma, where they're putting a lot of efforts and capital allocation in US. So same goes with Lupin also. Plus they have several FDA issues on their facilities, and there is no remediation even after November 2017. So we are cautious. I have not seen the Lupin numbers separately, but I will look at that. One-time loss, I'm not sure on what account it is, but again, it depends on whether in US they have entered any settlement or anything like that. So I will review and post that. I will inform.
Okay, I'm going to go back to Sun Pharma then, which you've seen the numbers. The other income was lower, I believe, which has impacted the profit. This is what our in-house analyst Darshan has highlighted to us. And higher material cost has also impacted the margins. What's the rating that you guys have on the stock? And I don't know if the street was already factoring in such numbers because the Taro numbers were also weak. Would you revisit your target price and your rating that you have on the counter?
It will probably depends on how the specialty revenue has done, because if you remember last couple of years, everything has been around the US specialty Illumia and other products. So if they have done well, they have become slightly more profitable, and how company sees all these numbers, I think it depends on our rating depends on all those factors. So we will review the rating only after we have some positive commentary on US specialty business.
What's the top pick that you guys have in the pharma sector?
So we are positive on Torrent Pharma, we are positive on Biocon, we are positive on Alkem. So these are the three topics that we have in our coverage.
Okay, Shrikant, we leave it on that note. Appreciate you joining us and taking us through your take on Sun Pharma's numbers. The stock, however, has come off completely because now that's trading just about flattish, and Darshan already highlighted that the numbers are actually below than what the street was expecting. You've got the revenues, which are up 5%, net profit has fallen about 27%, and EBITDA is down about 14%. Amar Singh, coming on the charts, the volatile move that we've seen just post the numbers, technically tell us how is it placed on the charts? Do you see any trade on Sun Pharma or, for that matter, even Lupin?
Yeah, I would say that Sun Pharma technically seems to have bottomed out, and it does have very strong support coming at around 410 odd levels. But on the upside, 440 is a crucial zone of resistance. If that is taken out, then the stock can rally towards 450, 460 odd levels. And talking about the other stock which you mentioned, Lupin. If you look at Lupin, what we are seeing here is that here the trend continues to remain negative. And overall, even the short-term trend remains negative for Lupin. However, what we are seeing on the weekly charts is that on the downside, somewhere around 690, 700 is a zone of support. So where we could find some support for Lupin, but it's more or less likely to trade in a range 690 to 740 is a range which I see for Lupin in the short term.
Okay, that's the technical view on these pharma companies. And pull up Z, after falling for last two sessions, I guess there is some short covering bounce that you're seeing in the stock, because this remains the laggard this year, and even in last 1 year, the stock's now at 236. Mayuresh, I'm sure you've been following what's happening around Z, and they yesterday issued a clarification to stock exchanges saying they are in receipt of a letter from MCA. Some probe is definitely ongoing. What are your thoughts now after the promoters have exited? Of course, they just have about 5% stake. The earnings were subdued. Valuations could be at historical averages or maybe lower than that. Do you think it can be a good value bet, or you would advise, due to this probe, one should stay away from the counter?
Afternoon, Naveen. Clearly, I think the couple of overhangs which were there on the stock, the promoter holding itself, that has come off significantly. So I think one of the major overhangs for the stock is largely done with. But I think all the news related to letters being sent out and the probe being initiated, I think that creates an additional overhang. And that additional overhang is not good for any stock. Secondly, I think the methodology that we follow at William O'Neill, I think we follow the cancel methodology. In that sense itself, I think the quadrant in which Z lies at this point of time is one of the weakest quadrants, where I think the earnings growth, and you're absolutely right in terms of the environment that it operates out of at this point of time. Advertising growth has been very, very patchy. Subscription growth has been just about there, up to the mark. But largely, I think the overall growth dynamics still appear to be missing at this point of time. So I think it lies in the lowest quadrant as per our canceling methodology, where earnings are not accelerating. And you've probably seen that in terms of ROEs, which also remain subdued. And that clearly reflects in terms of the price performance, which is also not great. So considering all these factors and features together, I think I'll still wait it out. I think we'll not be in a rush to look at Z at this point.
All right, stay on with us, gentlemen. Lots to talk about, but in the meantime, let's also take a look at what dealing rooms are recommending this afternoon. Darshan Mehta is here with his channel checks. Darshan, good afternoon.
Good afternoon, Devina. One of the stocks that's been spoken about today is TVS Motors. Post the number, there was a bit of short covering that happened and cooled off, and today again there is fresh buying that's emerging on the counter. Decent volumes, almost 3 million shares have been traded. Some of the HNIs are rather active on the counter, and positionally they are accumulating TVS Motors. The other one is Welspun Corp, which is trading at a fresh 52-week high. Dealers believe that the momentum probably will continue for the counter. They are bullish on the counter. And finally, the last one is a couple of steel stocks. So you're looking at counters like Tata Steel, JSPL, JSW Steel. In fact, JSPL today is trading at a fresh 52-week high. The commentary that came in from Arcelor and improving things in China are something that dealers believe are positive for the steel industry, and they are indicating there could be more positive bias.
All right. Thanks a lot for that, Darshan. Those are a few stocks that you also need to keep in mind. Also, whereas we're approaching closing, it's important to get in a sense of what kind of closing strategies can one adopt towards the end of trade with buy today, sell tomorrow ideas, sell today, buy tomorrow ideas from our technical experts. Brijesh, I'll come to you first on your closing trade.
Devin, I have two buy calls. One is L&T Finance. The breakout has been witnessed in it for short-term trading, but it's been concerned. Then I'm looking for the target of 154. But purely for the BTST has been concerned. 128 around the stock has been quoting. So one can look out to buy with the stop of the 125. Play for the target of 133. Another is from a pharma pack, that is Torrent Pharma. The hourly charts indicates the probability of shooting up more. So one can look out for a BTSC sort of thing. 2009 the stock has been quoting. Present it can be used to go long with the strict stoppers of 1975. Play for the target of 2070 to 2075.
Amar Singh, what about you?
I would say that I would go with IGL, Impress Gas. This is one stock one can definitely look at because technically it's strong on the charts, and even towards the end of closing it continues to remain positive. So buying around current levels between 517, 520 levels with a stop loss of 504 and a target of 544 on the upside.
Okay, that's IGL. What did you make out of Gujarat gas numbers, Mayuresh?
Pretty decent, Divin. And again, if you probably look at the expectations, I think the expectations were that a lot of units in what we had probably opened up. So in that sense, the expected volume growth was expected to come through. But I think the marginal disappointment that you probably saw in terms of the reported top line, I think that was a classical spin-off, right? I think how LNG prices are priced at this point of time and the accessibility to LPG prices, which are obviously a lot more softer, I think that was where the classical dichotomy was. And that's where I think the pricing could not get increased and where they had to probably get sustainable increase in EBITDA per SCM were just marginally ahead of estimates. So again, there is reasonable amount of growth that can be assumed in terms and in lieu of cleaner gas, both from the PNG side, specifically the industrial PNG use, and even the CNG uses for Gujarat gas. But at this point of time, again, our take is that valuations have become expensive. I think we did book out profits before the results for the stock. Alternatively, we are still holding on to a stock like GSPL, the parent of Gujarat Gas. So I think both the transmission business is expected to remain extremely strong in terms of the new capex plans that can get announced, a couple of SPVs that are probably going through at this point of time. Additionally, and incrementally adds to the overall valuation. And the third element, obviously, is the stake that they've got in Gujarat Gas at 54%. So I think this perfectly fits our Cancellation methodology, where I think the earnings growth can get reflected in price volume action.
Okay, that's Gujarat Gas for you on numbers. Mayuresh, I was going to come to you on the retail companies. V-Mart reported good set of numbers and we've seen the reaction coming by. And of course, D-Mart has been going from strength to strength. They announced their QIP of almost closer to 4,000 crore with the floor price at 1999. And the stock's at, it did touch its live highs. It's come off from the high levels that we'd seen. Do you like, of course you like Avenue Supermarts, I believe, that you'd mentioned last time to us, but would you advise shareholders of maybe V-Mart or D-Mart to stay invested?
And again, I think the logic remains pretty clear because I think they are leaders within their spaces itself, specifically a company like D-Mart. And we do have a methodology where leaders get preference. So I think the numbers that it's probably stacking up quarter after quarter, you might say a couple of quarters back, there was some amount of stagnation in reported numbers. But again, I think the way the company is progressing in terms of store additions, what is probably happening in terms of the reported sales per square feet, the SSG growth that the company reports, and the dynamism in terms of the EBITDA per square feet that gets reported, along with the tight working capital that they probably run. I think it's a very tight ship that they run and very, very efficiently as well. So I think the earnings trajectory obviously stays very, very solid for this company. The institution's shareholding remains extremely solid, and the return ratios probably remain solid as well. So I think a leader in this space with a nice earnings trajectory, perfectly fits a bill. So yes, I think it's a hold. Valuations might be an argument at every point of time for DMart. But again, I think justifiably so. I think the price earnings growth continues and it remains one of our top notches in terms of the leader spaces that it runs out of. For DMart specifically, again, I think the numbers for this quarter were exceptionally better than what they reported last quarter. So I think when you probably had a volume degrowth of 8%, that has clearly come off to a 1% degrowth. The commentary again was very, very supportive. So I think a 20% revenue growth, expectations of opening up 6 to 7 more stores in the coming few months. Tier 3, Tier 4 cities with an average spend of around 330 odd rupees. And again, I think the bifurcation that probably goes through with Apparel for the 9-month period at 80 odd percent, you've got Kirana at 7% and the non-Apparel business at 13%. That augurs well in terms of the demographics that they operate out of. So on a quarter-on-quarter basis, I think solid set of numbers reported by DMart. Commentary aptly supporting it. The stock price is doing all the talking at this point.
Okay, Mayuresh, we'll leave it at that. Thanks much for taking the time out and joining us and giving us that perspective. Really appreciate your time. By the way, 2 or 3 names that I want to mark. One of them is at 52-week highs is Welspun Corp. Remember, the management spoke to us day before yesterday. Very bullish commentary about what the outlook ahead would be. And it's 198. That's up about 3%. So keep that at the back of your mind. But 2 financial names, and one of them is Bajaj Finance, which is up 3% and trading at life highs. The other one is up 4%, not trading at life highs, but up 4%. And again, an expensive name is HDFC AMC. That one, after a while, is in the top ranking Chartbusters list today. Look at that. It's trending higher today and it's trading at the highest point of the day on pretty decent volumes as well. So 2 financial names, different businesses, but both of them expensive and trading very well. Amar Singh, between the 2, which of the chart looks stronger?
Yeah, I would say that HDFC AMC looks better, I would say, on the charts, for the simple reason is that on the long-term charts, it continues to be extremely strong. And what we've been seeing on the short-term charts is that there was a lot of consolidation, and today there appears to have been a breakout above the 3250, 3270 zone. So, and also some of the short-term indicators are clearly pointing that the bullish momentum could sustain. So this is one stock one can definitely look at. On the upside, the stock now has a potential to rally towards 3550, 3570 levels in the short term.
Okay. A quick word on, these life insurance companies, ICICI Pru, HDFC Life, SBI Life. Brijesh?
See, ICICI Pru looks little bit better. It was been trading in a downward channel slope when the breakdown happened, and after that stock moved up. It made a high of 533, and after that minor correction came. But still, daily charts are still indicating for the bullishness. So presently, stock is quoting at 488. So if someone is looking for a short-term bet, then 475 would be your stop loss. Present it can be used to go long, and again look for the target of 525.
By the way, a lot of other broader market names also have done well. Balrampur Chini, for example, is, as I see on this screen, is actually doing very well for itself. For the last few days, the sugar stocks have come off, and in today's session, Balrampur Chini is up about 10 or 11% and trading at the highest point of the day. But we'll talk about some of those. Let's start wrapping up the markets for our viewers. And not a bad close, off the highs of the day, but still, you would take this because it's up about 1/3% with banks participating about 270 points. And a large portion of this rally happened post-policy. So the markets have taken the policy announcements pretty well. The mid cap and the small cap indices should come up on your screen, and gains out there to about 0.7% for the mid caps, about 0.43% for the small cap. It'll be interesting to see the FI numbers in today's session at the end of the day today. But let's talk about the large caps first and what's moved and what's not. Eicher Motors, a result reaction, some reaction to the margin performance, up 5%. Strength in IndusInd Bank, SBI, Bajaj Finance, all of them a result of post-policy moves. Bharti Airtel continues on its merry way, so up another 2.5%. Some strength for JSW Steel and GAIL too in the session today. What's not done well? Yesterday's top gainer takes a bit of a breather, 2.5% lower for Tata Motors. Cipla, intraday movement of almost 5%, so not a best day. And largely, IT has looked under stress. So Infosys, TCS and others have looked weak. And mind you, while Bank Nifty is doing well, it is doing well despite Kotak Bank and HDFC Bank not being in the pink of health. You don't normally have that these two would be under in the red while the Bank Nifty is up about 1%. But it's happened today. Navneet, the broader markets and very good performance of the mid caps and the small caps.
Absolutely, Neeraj. The rally for broader markets continue and we've rebounded quite sharply for that. Nifty mid cap index is closing the day with gains of nearly almost 0.6%. Let me take you through a couple of gainers first. And as we were talking to Mayuresh as well, the retail companies were in focus. So you had V-Mart, which reacted quite positively as the numbers were pretty good. Bottom line growth of about nearly 40%. And D-Mart also rallying after you got the floor price for the QIP of almost closer to 4,000 crore. And the stock touched its live highs today. The housing finance companies were in focus after the RBI policy. So you had Indiabulls Housing Finance, which was up about 15%. You had Piramal Enterprises, and today was the second day in running when you had Piramal moving up. So 8% gains coming in there. And Shriram Transport also had a good outing today. The stock rallied about 8%. Remember, this was the third straight day. Shriram Transport has been gaining post its numbers. It's gained about nearly 20% now in the last 3 sessions. The PSU banking lot was quite active today. Bank of Baroda was up and about, and a couple of more earnings reaction. I guess Schneider Electric was locked in upper circuit of 20%. The numbers looked good, and hence the reaction that came up. Schneider Electric up about 20%. Dalmia Sugar, Neeraj highlighted about the sugar companies, and this one also up and about. In fact, this one's closing almost with gains about nearly 19 to 20%. On the losing side, Interglobe Aviation was down today. That did not have a great session, so the stock's closing with cuts of 3%. Jubilant Foodworks, some profit booking kicking in after the stock rallied to those live high levels. So that's closing almost at the lowest point of the day. You also had profit booking kicking in for something like Dr. Lal Path, that was also down, and something like DLF. I think this one also witnessed some bit of profit booking. Dr. Lal is closing with cuts of about 4.5%, and DLF also down about 3%. And chemical companies have been doing well, but you had Sudarshan Chemical today, which is closing with cuts about nearly 4%, and it looks like a case more of profit booking, especially for chemical and companies like Jubilant Foodworks, which have been rallying in the recent past, Davina.
All right, so that's what you've got in terms of the daily snapshot for the market. So the indices have closed yet again in the green, so this is going to seal the deal. 4th straight day of gains for the indices post-budget. You've got Nifty Bank up with gains of about 284 points. Coming down to the individual contributors and the point contribution to this move that we've got, HDFC sounds the contribution of HDFC Bank is contributing 17 points. SBI Bajaj Finance doing okay. HDFC Bank and Kotak Mahindra Bank are laggards.
All right, those are the Nifty contributors. Let's also take a look at the broader market, especially how the market breadth panned out for the entire listed universe on NSE. So we're closing in favor of the advances, but definitely there was some profit booking which may have kicked in the last half an hour to 45 minutes of trade. I also want to pull up India Volatility Index. Remember, it had moved to those levels of 17.5, and we were going into the budget. And from those levels now, India VIX is at 13.75. This will be very, very good level if the markets once again have to rescale those all-time high levels of about 12,430, Davina.
All right, and finally the turnover figures. The last 2 days cash market has been active, and it's yet another day where there's tremendous activity in the cash market. So the turnover is about 46,000 crores in the NSE cash. You've got obviously this is a number because of the options expiry on the futures and options side, but an encouraging number in the cash market. Let's quickly also get in closing comments from our technical experts. Amar, I'll come to you first. One thing that you'll be watching out for tomorrow.
Yeah, I would say that the close has been positive, but as I said, sustaining above 12,150, 200 mark is something which is very important for Nifty. But on the downside, it has got support coming around 12,040, 50 zone. So one definitely needs to wait if it sustains above that level for any fresh long positions, or we could see some consolidation.
Okay, Brijesh, what about you?
See, I'll continue with what the Amar says. The consolidation would be there, and Nifty and Bank Nifty both have moved up significantly from the swings low, and the 4 days of rise and small profit booking or a small correction can't be ruled out. So I'm looking Nifty at least touching a level of 12,000 to 12,020 mark, and after that again resuming up. Whereas the Bank Nifty has been concerned, then 30,600 is a level should be watched very keenly. So little bit correction if it comes, then well and very good for the Bank Nifty and Nifty. Or I would be saying overall trend would be bullish if it's little bit correction comes up.
Okay. We leave it at that, gentlemen. Thank you so very much for joining us this afternoon, Brijesh as well as Amar. And with that, we're also going to wrap out on Countdown from Neeraj, Navneet, myself, and the entire team. Let's put the show together. Thank you so much for watching.